What is portfolio management and why is it important? Stay tuned to learn more about Girard's investment thesis and how it applies to all clients. Hello, my name is Brian Hungarter, wealth advisor at Girard, and today I have the pleasure of being joined by Tim Chubb, Girard's Chief Investment Officer. Our topic of the day, Portfolio Management 101. We know the last couple of years have been a little hectic from a volatility standpoint, whether it's global pandemics, geopolitical forces, general market pullbacks, etc., right? So how do we create, devise, and steward our clients through a succinct and successful wealth management experience? Tim, thanks for joining us today.
Thanks for having me, Brian.
At a real high level, Tim, what is portfolio management?
Yeah, at the most foundational level, it really is the blending of art and science to properly design and build a portfolio to align it with the client's goals and objectives, and just the ongoing management and discipline and conversations that need to be had with clients on an ongoing basis to make sure those things are continually aligned.
A client walks through our doors completely fresh, completely open to new ideas. Where does the portfolio management process start?
The first place is asset allocation, and these are words that I think are often talked about, but really maybe one of those things that just investment speak, right? And it really, at the most highest level, is trying to blend how much stocks, how much bonds, the flavors within it. And when you think about it in the most, I guess, basic level, your blank canvas is really every stock and every bond in the entire world. And then it's taking those goals, objectives, and that unique DNA of someone's financial plan, or at least what they're trying to accomplish with their portfolio, and then taking it a step further in security selection and investment selection.
And you hit the nail on the head, right? I often liken this to clients to going in to buy menswear. If you're going to go in and buy a suit off the rack, well, that's great. That might achieve a certain end, but we could also build you a fully tailored and custom suit with a wealth plan, with conscious asset allocation that might steer the ship a little more strongly, right?
Yeah, I think a lot of it comes back to risk first and foremost, and knowing what a client's risk tolerance is ultimately going to be, trying to set them up for success to make sure that the portfolio is taking on enough risk to make sure they're meeting their goals, but not taking on too much risk that's going to cause emotions to get involved and derail them.
And you've tapped on this a couple times, which is all these factors help us construct a portfolio. Well, what does portfolio construction or security selection look like?
I think when we think about it, sort of just, layers of a cake, big picture, how much stocks, how much bonds, and having a deliberate allocation and a discipline to stick in that mix. From there, it's thinking about how much international, how much domestic, and then it's how much are we allocating to each investment and the risks associated with each one of those decisions. And so it gets complicated quickly as we start, going through those layers of the cake. But it's really the discipline and target to rebalance back that's most important.
Another key point you just hit on was discipline, right? Inherently, when you build a diversified portfolio, you're going to have winners and you're going to have losers, right? Why is it important that a client not only create a plan but stick to it?
I always joke, especially in the investment committee, as running and managing diversified portfolios, you're always apologizing for something. And markets are very difficult at time, and you have to be right twice, when to get out, when to get into something. And so a lot of times we think about allocations as, neutral, overweight, underweight, with, guardrails and rumble strips around them. And so when we see market volatility, and sometimes it's good market volatility where the stock market, for example, is rising to all-time highs, and value valuations are getting stretched, taking some profits, sticking to that plan, rebalancing back to target with how much stock exposure we would like in the portfolio, and then all the other investments that make up that stock exposure. I always joke, it's like make that big first call, then it's the flavors that you're picking after that.
Tim, if a client was just completely lost or flustered, right? How would you recommend they get started on this journey? How can Girard provide the most assistance to someone who's walking in off the street and saying, I feel over my head here?
I think it's getting a look at just the financial planning experience and starting there. From a portfolio management standpoint, it comes back to risk tolerance. It comes back to those goals and objective, making sure that a client may have enough cash or liquidity available if they have an emergency to arise. And it's why it's so important to make sure the left hand knows what the right hand's doing. The financial plan and that discipline is just as important, in context of with the portfolio on the other side of things.
Excellent. Well, Tim, thank you for your thoughts today. We appreciate it.
Yeah, thanks for having me.
And to you, the viewer, thanks for staying engaged. If Portfolio Management 101 is something that you'd like a little more guidance on, or something that maybe scratches an itch that says, what should I be thinking about, then please reach out. Visit our website, meetgirard.com. While there, you'll find contact information for Tim, for myself, and the rest of our team. We'd love to walk you through these introductory conversations soon.